Welcome to the TGI Investor Conference Call discussing 2012 full-year results and significant developments. My name is Sandra and I'll be your operator for today's call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session. Please note that this conference is being recorded. I will now turn the call over to Mr. Juan Felipe Gonzalez. Mr. Juan Felipe Gonzalez, you may begin.
Good morning and welcome to the first earnings conference call of Transportadora de Gas Internacional, the leading natural gas transportation company in Colombia, and a subsidiary of Grupo Energía de Bogotá. Today we have with us Mr. Santiago Pardo de la Concha, TGI's Chief Financial Officer. My name is Juan Felipe Gonzalez and I'm the Head of Investor Relations for EEB. Slide deck is available by Webcast and will be posted on EEB's website. This morning presentation is divided in two parts. First, I will make some introductory overview of EEB in terms of business strategy and portfolio scope. Then Mr. Santiago Pardo will take a look on the principal TGI's business accomplishments of 2012. He will also review TGI's significant developments and most relevant financial and operating highlights. After that, we will be pleased to open the call to questions. I take the opportunity to tell you that EEB expects to hold another conference call on April 9th, 2013 to review our 2012 results. We will be in New York and London on June 3rd and 7th as part of the Colombian Inside Out Conference organized by the Colombian Securities Exchange Deceval and Citigroup. We hope to see many of you at this event. So now we will review the EEB strategy. Remember that EEB is the holding company of TGI, and TGI is the most prominent natural gas transportation company working in Colombia. EEB, the holding company, has focused its strategy on the transportation and distribution of energy. Therefore, we have investments in electricity and natural gas with a regional scope. We currently have operations in Colombia, in Peru, and Guatemala, and we're looking forward to enter the Chilean market, specifically the electricity transmission business. We are hoping to make a bid by April. On the upper left part of the slide, you will find a summary of the group's strategy. Beginning with our focus on natural monopolies. Most of the cash flow generated by the group on a consolidated basis comes from natural monopolies, as I mentioned before, transmission distribution of electricity and transportation distribution of natural gas. We have been developing a business plan focused on growth in controlled subsidiaries. If you remember the numbers of EEB, in 2006, around 15% of the cash flow came from companies that we control. That picture changed dramatically, and in 2012, around 44% of the cash flow comes from investments with control, and TGI plays a major role in terms of cash generation for the group. Another key aspect of our strategy is our business plan under execution. It's not common to find a utility company in the region with such an ambitious plan under execution. The business plan is valued at $2.5 billion and is being executed in the time frame of 2011-2016. We work in countries that have sound regulatory framework. That's the case of Colombia, of course Peru, and also Guatemala, and definitely Chile, which is the market that we're our next step in our business strategy. Next aspect of the strategy is our access to capital markets. Of course, this is an industry, capital-intensive industry, and we have a good name in the international bond market. And it's also worth mentioning that at the end of 2011, we were able to make a re-IPO in the Colombian market. And finally, there is a experienced management team with a long track record in the industry, not only in the holding company, but also in our control affiliates. Finally, before I pass to Santiago, we have a diversified portfolio. We have investments in all the electricity value chains and almost all the natural gas value chains, with the exception of E&P, which is a market or a business segment that we will not enter because is not the risks are too high, so it's far apart from our core strategy. I will pass now the presentation to Santiago. Please, Santiago, continue.
Thank you, Juan Felipe, and good morning to everybody. Thank you for attending. I would like to just briefly start with an overview of TGI before jumping over to our most significant developments and key updates. As you know, TGI is the largest natural gas pipeline company in Colombia. We have a strategically located network that is connected to the two main basins that produce natural gas in Colombia. In the north, La Guajira, and in the east, the Cusiana-Cutiaga basins. And we serve the interior of the country, where the 70% of the GDP and population of Colombia are located. As we're a natural monopoly, and as such, we're a regulated company. The regulatory framework is quite favorable and stable and constructive, and that has allowed us to generate very stable, predictable, and continually growing cash flow generation. Our cash flow is very strongly indexed to the U.S. dollar because the majority of the tariffs are indexed to the U.S. dollar. So approximately 75% of our cash flow is denominated in U.S. dollar. And our strong financial results have been produced not only by what I have just mentioned, but also by the very strong and dedicated team that is running TGI on a day-to-day basis, which has a very solid track record in the industry, as well as to the support and expertise of our two main shareholders, Grupo EEB and CVCI. TGI is a relatively young company. We were born in 2007 as a result of the sale of assets owned by a company called Ecogas in a privatization process by the central government of Colombia. They sold these gas transportation assets, which were awarded to Grupo EEB, and thus TGI was created. Since then, we have assumed control of our operations, received some assets that were initially under BOMT schemes, and undertaken a very aggressive and important expansion program since 2008, 2009. And by the end of the year 2012, and we'll delve into this a little bit further, we finished that expansion program, and we hit major milestones such as the refinancing of our 2007 bond issue, and are becoming fully investment grade. Also in 2011, we received a capital infusion from CVCI, $400 million, which enabled them to purchase a 32% stake in the company. Next, we'll go to the key updates over the past 6 months or so. First, you probably are aware of this, but Fitch upgraded TGI to BBB- on November 2nd, and together with the Baa3 rating we have from Moody's, that gives us 2 investment grade ratings and reflecting our improving financial results and stable cash flow generation. So currently we're BBB minus by Fitch and Baa3 by Moody's and BB with positive outlook by S&P. Next, on the key update list, I wanted to talk about the tariff review process with the regulator, with CREG. As you know, in September 2010, CREG issued our new tariff schedule for the next 5-year period. This new tariff would have resulted in an increase in the average tariff for TGI of approximately 5%. However, after reviewing carefully, TGI considered that the full cost of its investments and assets were not reflected in the tariff schedule, and thus we appealed the decision. This appeal put on hold the application of the new tariffs, and the appeal process took 14 months, during which we worked very focused and tirelessly on improving the results. And by November 19 of last year, 2012, the regulator issued the new tariff, and those are a significant improvement over what we had gotten initially. Our regulated revenues are going to increase by approximately 10%, and despite this, we're still not entirely satisfied with certain aspects. So we're pursuing other legal actions to get some of these issues fixed. But we are already in the process of applying the new tariff. So starting basically in December 2012, we have started applying the new tariffs, and those will be in full application starting by the 19th of this month. So that should give a significant boost to our 2013 results. Second, in the key update list is the completion of the Cusiana Phase 2 expansion. This was the final phase of the expansion program we launched in 2008, which consisted of 3 phases, Ballena, Barranca, Cusiana Phase 1, and Cusiana Phase 2. We achieved commercial operations on this expansion in August 2012 at a cost of $296 million. Our network was increased by 187 kilometers, and our transportation capacity was increased by approximately 110 million cubic feet a day, of which approximately 91% was contracted in the long term. This should result in additional revenues of approximately $56 million per year. Additionally, this expansion to the system has already been proven in real-time operations, and we're very pleased with the results. Next, we'd like to tell you about the takeover of the O&M activities of our compression stations. These activities were previously done by a third-party contractor whose contract expired on July 27, 2012. In April, the board of the directors of TGI had made the decision of to take the operation of 12 of our 13 compression stations directly, and so starting in July 28, we took direct control over these operations. We estimate that annual savings as a result of this decision will be approximately $3 million, and this will strengthen our know-how in O&M and will allow for a better application of the RCM model to improve O&M activities. During the past 6 months, the results have been very positive. Actual savings for the period August to December were actually $2.5 million. And finally, this process implied that TGI hired 133 persons, most of which were essentially the same people that previously worked for the contractor and who were doing the O&M activities at our compression station. Moving on to the financial and operating highlights, we'd first like to talk about our operational performance. Starting from the top left, you can see our network length increased to almost 4,000 kilometers in 2012 as a result of the Tuscana Phase 2 expansion, which resulted also in an increase in our capacity and, importantly, in our increase in our firm contracted capacity, which by the end of February of 2013 is up to 627 million standard cubic feet per day. In terms of transported volume, the volumes in 2012 were relatively stable. This was partly a reflection of the fact that in the first half of the year we had relatively low volumes because a very low dispatch in the gas-fired power plants as a result of the strong rainy season that we had in 2011-2012. In terms of gas losses, we're at approximately 0.5%, which is kind of right in the middle of where what we are allowed by regulation, which is 1%, and it's consistent with industry standards. And finally, in terms of our load factor, has shown a decrease in 2011, 2012 from the levels seen previously. This is a result of obviously the expansion programs coming into place, but this is not something that is negative. This is a little bit by design. We need to have the excess capacity for when the gas-fired power plants are dispatched fully, and given that gas is on the margin in Colombia, being predominantly hydro for its electricity generation, we need the spare capacity to be able to meet the peak needs, as well as to be able to cope with demand growth over the next 5 years or so. Moving on, in terms of market share, in 2012 we transported 48% of the gas transported in the country, and we own approximately 57% of the pipeline network. There's obviously very high barriers to entry to our business, as it's not very economically efficient to build a parallel pipeline network. Finally, I'd like to mention that, as you already probably know, we have already started our international expansion through the Contugas project in Peru, in which we have a 25% stake. This is a 30-year natural gas distribution concession, although it's really also transportation and distribution. And the project is online and is expected to begin operations fully by the first half of 2014. Our revenues are highly predictable as a result of the regulation. Approximately 94% of our revenues are from regulated tariffs, and the sectors and the industries that we serve present relatively stable consumption patterns. Approximately 55% of our revenues come from distribution companies, which have the most stable consumption patterns. They're basically residential and commercial customers. And we have other very stable customers, such as Ecopetrol's refinery and the vehicle, the gas that is used as a fuel for vehicles. Those represent, in aggregate, approximately 70% of our revenues. Approximately 82% of our revenues are based on fixed tariffs, which are not dependent on volume transported, so that gives us a very, very strong revenue base and very predictable revenues that are not dependent on actual volume. And as I mentioned previously, approximately 76% of our cash flow generation is denominated in U.S. dollars. Moving on to our main customers, five customers concentrate 77% of our revenues. But this is actually a positive for the company, as these customers are some of the best quality names in Colombia, starting with Gas Natural, which is the gas distribution company in the Bogota region, which accounts for approximately 26% of our revenue. Ecopetrol, which accounts for 22% of our revenue. And Gases de Occidente, which distributes gas in the southwest region of Colombia, in Cali and in the coffee growing region, 17% of our revenues. EPM distributes gas in Medellin and also is an important power generator, 8% of our revenues. And Isagen, which is the third largest power generator in Colombia, generating 4% of our revenue. Our revenues are contracted long term. We have an average capacity of, or an average life of contracts of 8.4 years. And we have important maturities coming in 2021, but we see no problems in the rollover of those contracts, as most of the clients, as our clients will still need to use gas, and will therefore have the incentive to renew earlier rather than later to preserve their capacity in the pipeline. So we actually expect to renew contracts a couple of years before the extension, before the rollover date. Moving on to our financial results, we had a good 2012. We met our targets in terms of revenue and EBITDA. We hit $390 million in revenues, and we had EBITDA of $293 million, with an EBITDA margin of 75%. In terms of FFO, we had $132.5 million compared to $116 in 2011. And this, if we exclude from the FFO calculation the one-time effect of the costs associated with the refinancing of our debt, our FFO would have been close to $200 million. And finally, our capex were close to $185 million in 2012, most of which are obviously the expenses associated with the finalization of the Cusiana Phase 2 project. In terms of ratios, our leverage ratio, measured as the total debt to EBITDA, including both senior and subordinated debt, continued to improve. We have moved from a leverage ratio of 6.5 times in 2008 to 4.2 times in 2012, including senior and subordinated debt. If we look at net senior debt to EBITDA, we're down to 2.4 times from 3.7 times in 2008. And last but not least, in terms of interest coverage, we have gone from 2.5 times in 2011 to 4 times in 2012, and this is a reflection of the reduction of interest costs brought by our refinancing, in which we basically reduced our coupon from 9.5% to 5.7%, a 40% savings in our senior debt interest expense. Finally, moving on to the expansion project, I would like to mention that it is the vision of TGI's shareholders and management to continue to grow the company. We want to continue to have growth, so we'll pursue growth opportunities both in Colombia and outside Colombia. And we want to show you the selection of the portfolio of projects that we currently have in the pipeline, no pun intended. The most important project that we currently are working on is Cusiana Pia San Fernando project. It's a project that we're doing in for Ecopetrol. It's to bring gas to their oil extraction operations in the eastern basin of Colombia. It would require the building of a 150-kilometer, 20-inch loop from Cusiana to Apiay, and then a new 10-inch pipeline of about 50 kilometers length from Apiay to San Fernando. This should increase transportation capacity in that system by approximately 70 million cubic feet a day, and the cost is estimated to be approximately $244 million with an uncertainty range of approximately 20%. We're currently in the engineering phase. We're doing basic engineering and also the environmental studies to apply for licenses. We signed an MOU with Ecopetrol in December of 2012, and we expect to have commercial operation of this project by 2015. Second project is La Sabana Compression Station. This is a $57 million project to construct a compression station in near Bogota to basically increase transportation capacity in Bogota and the surrounding area to be able to keep up with the growing demand. This is a project that is actually at a relatively advanced stage. We're well advanced in engineering. We've already signed the contract to purchase the main equipment for the compression station, and the RFP for the EPC contractor is already ongoing and should be finalized by May of this year. Site works are expected to start in the second half of the year, and the expansion or the station is expected to begin operations by 2014. And finally, we have three smaller branches of our network near in the region near Bogota. These are smaller projects that in aggregate are about $35 million. And these are projects that we are undertaking in partnership with Gas Natural, because we're serving a population and cities that are in the area of service of Gas Natural. Currently, we are trying to resolve some tariff differences with CREG, with the regulator dealing with the tariffs that would apply for these projects. And once we solve those differences in the tariffs that would be applicable, we would begin engineering and design for these three expansion projects. These are kind of the projects that we have at a more advanced stage. We're also looking for other opportunities, but these three opportunities are fully financed. So based on the cash we have on hand plus our cash flow generation, we would not need to incur any additional debt or require equity infusions to undertake these projects. That is it for what I wanted to cover. So now I will open it for questions and answers.
Thank you. We will now begin the question and answer session. If you have a question, please press star, then 1 on your touch-tone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. If you're using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star, then 1 on your touch-tone phone. Standing by for questions. Once again, if you have a question, please press star, then 1 on your touch-tone phone. And at this time, we have no questions.
Okay, so thank you. I would like once again to thank everybody. At the back of the presentation, you will also find appendices with that give a more general overview of the industry and the Colombian economy and the regulatory environment, as well as our management team and shareholders. So I would like to thank everybody and look forward to your participation in future conference calls. Thanks.
Thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.